If you're not prepared for the 2026 market crash, you could lose everything. But if you are, this might be your only chance to become a millionaire. Let that sink in for a second, because most people are going to hear that and still do absolutely nothing. And that's exactly why, when the crash hits, the majority will panic, lose money, and walk away blaming the market, while a small, disciplined group quietly builds life-changing wealth. So the real question is, when that moment comes, which side are you going to be on? Here's the truth nobody tells you. Stock market crashes are not rare accidents. They are part of the system. They happen again and again, and every single time, the same pattern repeats. Prices fall, fear rises, people panic, and the opportunity of a lifetime appears, but only for those who are prepared to see it. Think about it. When everything is going up, making money feels easy. Everyone feels like a genius, but that's not where real wealth is built. Real wealth is built in moments of uncertainty. When prices are low, confidence is gone, and the crowd is running in the opposite direction. That's exactly what a crash creates. Now, I'm not here to scare you. I'm here to wake you up, because signs of a potential downturn are already building. High interest rates, global economic pressure, inflated asset prices. Whether it happens in 2026 or slightly before or after doesn't matter. What matters is this. If it happens and you're not ready, you will react emotionally instead of strategically. And emotional decisions in the stock market are expensive. Let me show you how this really works. When a crash begins, the market doesn't politely drop and give you time to think. It falls fast. Headlines get dramatic. Social media turns negative. You'll hear people saying things like, "This time is different," or "The market will never recover." And in that moment, fear feels real. But here's the part you need to understand. That fear is exactly what creates the opportunity. Because when prices drop 30, 40, even 50%, you're no longer paying premium prices for great companies. You're buying them at a discount most people only dream about. The same assets, the same businesses, but at a fraction of the price. And that's where millionaires are made. Not by guessing the top, not by chasing hype, but by stepping in when everything feels uncomfortable. But let's be clear, this doesn't happen by luck. It happens by preparation. The first thing you need is liquidity, cash. Because when the crash hits, opportunities won't wait for you to figure things out. If all your money's already tied up, you'll just watch from the sidelines. And trust me, watching a once-in-a-decade opportunity pass you by hurts more than any temporary loss. The second thing you need is a plan. You should already know what you're going to buy before the market crashes. Not during, before. Identify strong companies, industries with long-term growth, and assets that have proven resilience. Because in the middle of chaos, you don't want to be researching, you want to be executing. The third thing, and this is where most people fail, is mindset. You have to train yourself to think differently than the crowd. When others see danger, you need to see potential. When others panic, you stay calm. That doesn't mean you ignore risk. It means you understand it and act with discipline instead of emotion. Let me give you a simple example. Imagine a stock you believe in drops 50%. Most people see that and think, "I'm losing money. I should get out." But a smart investor sees the same situation and thinks, "This is the same company, now selling at half price." That shift in thinking is everything. And here's where the magic really happens. Compounding after the crash. When markets recover, they don't just crawl back slowly. Often, the biggest gains happen in a short period of time. If you were buying during the drop, those gains multiply your wealth much faster than normal market conditions ever could. But if you were sitting out, waiting for certainty, you miss it. And missing those early recovery moves can cost you years of growth. Now, I want to address something important. This is not about going all in at once. That's risky. Instead, smart investors use a strategy called averaging in. As prices drop, you invest gradually. This reduces risk and increases your chances of capturing the true bottom without needing to predict it perfectly. Because let's be honest, no one consistently times the exact bottom, but you don't need to. You just need to be in the game when prices are low. Also, diversification matters. Not every company will survive a crash. Some will disappear completely. That's why you spread your investments across strong sectors and assets. You're not betting everything on one outcome. You're building a system that can win over time, and time is your biggest advantage. The longer you stay invested after buying at low prices, the more powerful compounding becomes. What looks like a small investment during a crash can turn into something massive over the years. Now imagine this. The market crashes. Everyone is scared. But instead of panic, you feel focused. You've been preparing for this moment. You start investing into high-quality assets at prices you never thought possible. Months pass, the market stabilizes. Then slowly, it begins to recover. A few years later, those investments have doubled, maybe even tripled. Your portfolio doesn't just recover, it grows beyond what you thought was possible. That's how people become millionaires in the stock market. Not by avoiding crashes, but by using them. So as we move closer to 2026, don't just watch the market, prepare for it. Build your strategy. Strengthen your mindset. Keep some capital ready. Because when the opportunity comes, it won't feel comfortable. It will feel scary. And that's exactly how you'll know it's real. At the end of the day, the crash itself isn't what determines your future. Your reaction to it is. So decide now. Will you panic with the crowd? Or position yourself to profit from it? Because this might not just be another market event. This might be your moment.